Hey guys, what's up? Alec back with the daily stock market, and look at that. Super red day. Uber down, leading the pack 10%, Wynn 7%, Netflix down 7%, Pins down 6%, Square down 5%, Baba down 4%, and the list goes on and on. In this video, we're going to talk about as many different stocks as possible. So we're going to give quick updates. We're going to start with Netflix. But before we jump in this video, make sure you subscribe with post notifications on and slap a big thumbs up on this video. And if you're already subscribed, make sure you hit that notification bell so you're alerted anytime the new videos come out. So here we have Netflix at $214 per share. Finished the day down 6.8%. We have Netflix down 10% on the week. And in the last 3 months, we can see that it's been following the support and resistance here. Okay, so here we have the support and resistance that Netflix has been following around $218 per share right there. Recently broke that support. We can see that it's now down to $214 per share. We have a big support here at $213 per share, which Netflix will probably most likely be breaking that 213 support also and head down closer to the $200 to $190 mark. So if we scroll down, we can see that I do have some options opened up on Netflix already. See a big green day when it comes to option trading. So if you want to get a hold of what trades I'm entering, option trading, what contracts I'm buying, expiration dates, and everything in between, make sure you message me on Instagram because I've replied to every single DM, and I have a few more spots still available for my private trading group. So the next stock we're going to be talking about is Apple at $139 per share, down 13% in the past month. We can see the downward momentum in the past month is clear as day. And Apple's had a big downward movement, down 20% just in the last few months, month and a half or so. And if we pull out to the 1 year chart, we can see that Apple's been a super volatile stock, going up 20%, falling as much as 20%, going back up 20%, and then falling 20% again, all in just the span of 1 year. Okay, a lot of other stocks in the tech sector are at 2020 lows or even 2019 lows. So to see Apple closer to $125, $115 per share is definitely in the cards, and it's definitely possible. Now, if you go back to my older videos, you can actually see we've been talking about Apple's going to hit $135 per share for a long time. Basically, every time it goes to $175 per share, there's always been a huge risk of it going back to $135 per share. It finally did in June, but I think we'll have a more downward movement and we'll revisit $130 per share again on Apple. And I think we'll even see below $130 per share to that $125 to $115 per share like we talked about on Apple. And there's a similar story going on with Amazon stock. If we pull out to the 1 month chart, we can see the downward momentum, 17% downward momentum in the last month, which is a huge movement for Amazon stock. We can see that it did rise up 30% from $103 per share. Okay, it has a 1 year low of $103 per share, $102 per share. In my opinion, we'll definitely see Amazon around $102, $105 per share again. And I think we'll even break into new 52-week lows to $95 per share. And we can even revisit these 2019 lows of $90 per share, $85 per share, and possibly even $75 per share on Amazon. So I'll tell you guys right now, here's an exclusive because I like to reward my YouTube members that watch the whole video, and my YouTube subscribers, I should say. I'm definitely have the highest price alerts between $75 per share and $85 per share on Amazon. And I think if you're a long-term investor, buying Amazon at $75 per share is definitely going to set up your long-term portfolio for easy success, especially if you have your portfolio diversity around 5% to 10% on Amazon, and you have an average cost of $75 per share on Amazon or lower, and you plan to hold for 3, 5, or even 10 years, I think that's going to be a win-win situation. Because even if we buy Amazon at $75 per share and we hold to $150 per share, which I think is definitely possible in the next 24 months or so, that's going to be a 100% gain from $75 per share to $150 per share on Amazon. So 100% gain on a big tech stock like Amazon is super attractive. This is not a no-name risky stock that you're going to lose all your money in. This is Amazon. They're going to be around for a while. They have a beautiful balance sheet, one of the best revenue income statements. They have the best business model in all the stock market, and they have a potential for 100% gain over the next 24 months. So of course, I'm going to be loading up on Amazon at $75 per share. Make sure you're also keeping an eye on Twitter, because there's a lot of movement that could be happening over the next couple weeks or even the next 30 days. Because at this point, there's stories unfolding pretty much every single day with Twitter. Okay, so all the news is now dying off, and we can see a downward pattern starting to form on Twitter. So buying puts on Twitter could be good. It looks like there could be a downward triangle pattern forming here. However, you would probably want to see more confirmation of lower lows below $48 per share before jumping into puts on Twitter. Other than short-term puts, I'm going to have my price targets closer to $35 per share to be buying Twitter. Yes, I do want to be buying Twitter, especially if Elon Musk is going to be committing to buying Twitter. I think anything that man touches is going to turn to gold. And if he's really committing to Twitter, I definitely want to be along for the ride. So at $35 per share or even $30 per share, I think it's going to be a lot more attractive to get in Twitter at that rate. The biggest risk and downside I would say Twitter has is probably $25 per share in the next 12 months. 6 to 12 months, we can see Twitter at $25 per share, which I will definitely pour $1,000 to $2,000 into Twitter stock if I can pick it up at $25 per share. And if Elon Musk, Mr. Elon Musk, is going to be the one that's committing to buying it, which it looks like he is as of right now. Watch out for JPM and watch out for Bank of America. Okay, JPM's down 7% in the last week, 16% in the last month, and 40% in the past year. This is a stock that I'd want to be picking up at a 5-year low for long term. Okay, I do like their fundamentals. I like their business model. I like everything that has to do with JPM for long term, especially if I can get in closer to like $90 per share, $85 per share, even $75 per share for long term. Keep in mind, they also have an 8.4 on their PE ratio, implying they are a good deal, and a dividend yield of 3.8%. So they're also a good dividend stock to pick up at a discount if we see them keep going down. But the main reason we're talking about them is because they are reporting earnings on October 14th, which is this Friday. Okay, we can see they've been underperforming on their earnings prediction. And we're going to be playing this pretty heavy in the close friends list. So if you want to see exactly what we're taking out, what options we're taking out on JPM and banking stocks, go ahead and message me on Instagram. We also saw big news coming from the CEO of JPM Chase, Jamie Dimon. Stocks could fall another easy 20%, and the next drop will be much more painful than the first, the CEO of the biggest banking, JPM Chase, was saying. Okay, he warned investors on Monday that he expects markets to remain volatile for the foreseeable future and that the S&P 500 could easily fall another 20%. If that's true, we'll be making so much money in the close friends list from all the option puts that we'll be doing. So make sure you message me, because this is a great time to be joining the close friends list and making money on shorting the stock market. It may have a ways to go. It really depends on the soft landing, hard landing, and since I don't know the answer to that, it's a hard answer. It could be another easy 20%. The next 20% could be much more painful. Rates going up another 100 basis points or even 125 basis points. People are predicting that we'll see a 125 hike, so that will be even more painful than what's predicted. And I think the negative rates, when all said and done, will have been a complete failure, says the CEO, Jamie Dimon. Okay, Europe is already in a recession, Dimon said, and he expects a recession in the U.S. to arrive within 6 to 9 months. An eventual economic downturn in the US could range from very mild to quite hard. Ultimately, it depends on the outcome of the war in Ukraine, Diamond added. Since it's impossible to guess exactly how bad things might get for both the economy and markets, investors and companies should just be prepared for worst case scenario. Companies should start shorting up their balance sheets now, Diamond said, adding if you need money, go raise it. He also warns that cracks are starting to appear in credit markets and that a full-blown panic, could emerge somewhere else in the universe of global debt. The likely place you might see more of a crack or little bits of panic is credit markets, and he added ETFs. It might be a country, it might be something you don't suspect. If you make a list of all the credit crises, you can't predict where they came from. Although I think you can predict that this time it will happen, he said. After assuring the public that the Fed would do its best to minimize the fallout for the U.S. economy, Federal Reserve Chairman Jerome Powell has recently adjusted his rhetoric to suggest that Americans likely won't be spared from another recession as the Fed hopes a soft landing. JPM is already becoming very conservative with its lending standards, Diamond added. The New York-based megabank is expected to report its third quarter earning results on Friday. Diamond's comments single-handedly helped drive stocks to their lowest of the season on Monday as the main indexes ended up logging their fourth straight day of losses. The S&P 500 finished down 27.27 points or down 0.8%. Okay, the longtime bank chief warned earlier this year that he saw an economic hurricane headed for the U.S. in August. He warned that chances of a harder recession were on the rise. And that's the end of the article. So, guys, that's why it's important to learn a new skill like option trading, because you can make money when the stock market's going down, and you can make money when the stock market's going up. So I hope you really appreciated that video. Smash a thumbs up if you did, and DM me on Instagram to join the close friends list so you can get better at option trading and you can follow along my trades and then develop your skills from there and build the confidence to take some of your own trades as well. You won't be able to see these green ones that say the close friends list because that's for close friends list members only, but check out success number 5, check out success number 6. There's hundreds and hundreds, and if not thousands of positive testimonials by now with students that are just having success week after week, month after month, making thousands of dollars. So check that out on your own time when you have some time. Some students up as much as $500 or more. DM me to get on the wait list, and that was just from 1 day of holding. So guys, thank you for all the love and support you've been showing on the channel and the Instagram. Subscribe with post notifications on. And if you're subscribed already, hit that little notification bell so you're alerted when these new videos come out. Share this video with a friend if you think that they will find it helpful. And I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.